Cold open midnight to 0:50. Imagine this, you walk into a store with no cash. You pull out a card and buy something anyway. No money exchanged yet, but somehow the system says it's okay. Strange, right? That tiny moment is the heart of a much bigger story, one that runs the entire global economy. Banks, governments, even your paycheck, all of it relies on credit. And yet, most people think cash is king. What if I told you that our economic system actually prefers debt over real money? Why it matters 0:50 to 2 o'clock. Here's the uncomfortable truth. The economy doesn't grow because people save. It grows because people borrow. Every major financial boom, every housing market spike, every tech bubble, they all share one invisible engine: credit. Understanding this is more than financial curiosity. It explains why inflation happens, why crises feel sudden, and why you're always hearing about too much debt, even when money seems plentiful. Step 1. The basics of credit, 2 to 4:30. Let's simplify. Credit is basically a promise. You get money today, you pay later. Sounds simple, but the scale is staggering. Global debt recently surpassed $300 trillion. That's nearly 4 times the entire world's annual economic output. And here's the kicker. Most of this debt doesn't even exist as physical cash. It's created electronically in bank ledgers the moment someone takes a loan. Think of it like magic accounting. A bank writes a number, you spend it, the economy hums. Nobody counted bills. Nobody moved gold. Yet somehow it works until it doesn't. Step 2. Why systems prefer credit? 4:30 to 8 o'clock. Why does the system love credit? Because it expands the economy faster than cash ever could. If everyone relied only on physical money, economic growth would crawl. Credit allows governments to spend beyond their tax income. It lets businesses invest in projects before they earn profits. Consumers buy homes and cars without waiting decades to save. Here's the irony. Credit is simultaneously the most fragile and the most powerful tool in the system. Every dollar borrowed fuels growth, but it also adds risk. Too much borrowing, and suddenly the promise of repayment starts to crack. Step 3. The hidden mechanism, 8 to 12 o'clock. Let's get into the math nobody mentions. Banks operate on a fraction of actual cash called fractional reserve banking. They keep maybe 10% of deposits on hand and lend the rest. That means your $100 deposit can create $900 in loans. Multiply that across millions of accounts, and credit doesn't just move money, it multiplies it. But here's the uncomfortable part. The system requires debt to function. Without continuous borrowing, banks shrink, governments can't spend, and the economy slows. In other words, growth is chained to debt, and debt is chained to confidence. Lose that confidence, and the house of cards trembles. Step 4. Hype versus reality, 12 to 1500 hours. Now contrast this with what most people think. We're rich because we save, they say. We'll be safe if we avoid debt. In reality, the global economy has never operated that way. Saving is a brake. Borrowing is the accelerator. Every economic headline, housing bubbles, student loans, government stimulus, reads like proof that credit drives everything. And yet, it feels counterintuitive. Debt is often painted as dangerous. But the system prefers it, needs it. The more it flows, the healthier growth appears. The less it flows, the more fragile everything becomes. Step 5. Bigger implications and risks, 15 to 1830. Step back and look at the big picture. Countries are borrowing faster than ever. Corporations are leveraged to the hilt. Even ordinary households carry invisible debt burdens that ripple across the economy. The irony? The very system that promises growth through credit can also collapse under it. A sudden drop in confidence, say, a financial panic or a mass default, can turn those promises into real losses almost instantly. The invisible engine that powered decades of growth could also trigger the next crisis. Closing, 1830 to 2000 hours. So next time you swipe a card, take a loan, or hear about a government stimulus, remember this. The system doesn't just tolerate debt. It relies on it. Credit is the lifeblood of modern economics. Cash is almost ceremonial. And while this invisible engine keeps everything running, it also raises a quiet question that nobody can fully answer. How much debt is too much? Because one day that question may not be theoretical, it may be urgent.